Good afternoon, ladies and gentlemen. I'm Nicholas Mak. It's a bit difficult to be the last speaker of the day, but I'm glad that Patrick has woken everybody up, make everybody more mentally alert. So, well, this is the last speech, last event for this two-day seminar, and I'm very happy to share with you about the findings and research about the Singapore property market. So the topic is about pitfalls and outlook. Just a bit of request, housekeeping, please don't take, I know that they are taking videos, I only know that after I arrive, but typically, as a sign of respect for our intellectual rights, please try not to take photograph. Now, possible pitfalls in the residential market. I'll divide my talk into pitfalls first and then about the outlook. Pitfall number one, for people nowadays, if you happen to have money and you are going to buy a property, there will be people out there who would like to be your friends, who would like to give you advice, and some of these people may have certain vested interests because they do want to sell you something. Because right now, everybody who's here, we are probably interested about property. It is a buyer's market, it is a tenant's market. So you may want to ask yourself, what kind of commenters, who is this person who may want to give me some advice? Sometimes it may even be at a property seminar. In my opinion, many of these commenters can broadly be divided into three groups. One are people who are researchers, consultants. They basically do not earn their salary from commissions. A second type are property agents. They earn their income from selling properties. So they'll come and tell you that, okay, I'm going to give you advice, or I'll even hold seminars and talks. But basically, it may come at a certain angle, they're trying to sell something. And the third type are people who actually have semi-baked ideas. They may not be as experienced, but they may pass themselves off as experts. So you may want to ask yourself, where is this advice given? And who organizes this event and venue? I'm actually quite happy, quite willing to talk at ST Property seminars because one, they are not a developer and they are not actually selling you anything. They are basically a platform. They are organizing events. They may have property exhibitions, but these exhibitions are actually held by, the properties that have been sold are not developed by ST Properties. But in recent years, there have been property seminars that are actually held at show flats. And well, I have to admit that I'm sometimes been asked to go to these show flats to give some of these talks. Ask yourself, if the seminar is held at the show flat, and the function of the show flat is actually to sell the property, just how independent do you think is that talk at the show flat? And what actually is the objective of holding that talk? The reason is that actually, because the sales at the show flat is quite slow. And the developer is putting pressure on the agents, you know, okay, I already spent money on advertisement, you asked me to increase your commission, I did that, but then sales are not moving. So the agents may be racking their brains and saying, how can they bring in more buyers? And one way is actually to hold seminars at show flats. But from experience is that such things don't work. People who go to such events at show flats are not there to buy. They are there to, one, listen to the seminar, two, eat the free buffet food, and three, enjoy the aircon. Nowadays, the weather is very hot. So they may bring the whole family there as some sort of a weekend outing. People who are really willing, genuinely wants to buy property, will go to the show flat and look at the property regardless of whether there's any seminars or not. And also ask yourself, do you remember times when the market is hot and basically you have to queue up at the show flat before it's even open? When the market is very hot, there's no time to hold property seminars. So if property seminars are held at the show flat, it's usually a sign that sales are very slow. So at such events, can the speakers really speak independendly? From experience, no. Sometimes it's very difficult because sometimes when I'm asked to give events, some of these talks, I already know that the prices are falling, the sales volume is low. What else do you want me to say? If you want me to say such things at the show flat, the developer's not going to be happy. My agents in my company are not going to be happy. So it really puts me at the spot. So sometimes, unless that person is willing to really sugarcoat a lot of things. I have heard there are some people giving at show flats, be careful about some of the advice that's given. Take, for example, there was one that I heard. This person, this speaker, certain big personality, actually give the advice that, oh, if you own a HDB flat, what you should do is sell your HDB flat and go and rent. Take the money and buy that condo unit that we are now marketing. And in the meantime, during the 3 years construction period, the rental that you pay will be less than the price appreciation that could happen in 3 years down the road. I think some advice like this, you have to be very careful because what if the property price didn't go up? And then the other thing is, one word of advice is never, never, never play a fool with your family home, the home which you and your family members live in. Don't go and sell it and rent it and put the money in something that's uncertain. So such advice sometimes given, you have to ask yourself how independent it is. By the way, this person who is doing it, he's basically saying, you want to sell the HDB flat? I got agents waiting for you. You want to rent the HDB flat? I got also my agents waiting for you. You want to buy the third property? My agent's also waiting for you. So there is vested interest at some of these advisors. The second pitfall we should look out for is rising interest rates. In the past few months, there's been news reports that STIBOR is rising. And in fact, some people are refinancing it just because of this. SORS, which is linked to the US dollar, is also rising. So fixed rates, mortgage packages are becoming more popular. So this shows for quite a while after the financial crisis, the interest rates in Singapore has been fairly flat. In fact, STIBOR has been hovering around 0.4%. But since the end of last year, it has suddenly started to spike because there's expectation that the US economy is improving and the US Federal Reserve will increase interest rates sooner or later. SOR is more volatile than STIBOR, and SOR in fact spiked first. And STIBOR has also been rising, and in a couple of days ago, it actually went up, on April the 9th, it went up to the 12-month high of about 1.027%. 1.027%. But the good news is that it actually started to ease a few days ago. So the fear that STIBOR is going to keep on continuing going up and by Christmas maybe it might reach 3%, well, it may be a bit unfounded. So at the meantime, it's staying above 1%. So that is another pitfall. So what if interest rate goes up? Now, we run the scenario that if, let's say, assuming someone who's 30 years old and taking a loan of about $1 million, a loan tenure of 20 years, what happens if interest rate goes up for this buyer? And this is very typical. Even if you take an 80% loan-to-value ratio and you take out a $1 million to buy a property that's about $1.2 to $1.3 million, this is what could happen. If interest rate is at 1%, the person is probably paying for, the monthly installment is about $4,600. It goes up to 2%, it becomes about $5,060, a 10% increase. For every 1% increase in the interest rates, his monthly installment actually goes up between 9 to 10%. Imagine if you are buying this property for investment and renting it out. Unless your rental is able to keep pace with the increase in interest rates, otherwise you'll be paying a lot of things out of pocket. The third pitfall to look out for is economic uncertainty. Singapore's economy, right now, if according to the Prime Minister, if we can achieve GDP growth of between 2 to 4%, we are doing fairly well. But recently, things have been a bit choppy. The Purchasing Managers Index, which is a forward-looking index, has been a bit below the red line, about 50 points. If it goes below 50 points, typically it means that the economy may not be growing as strong further down the road. And actually, the price of the property Singapore residential property has been easing for the last 1.5 years. But the good news is that GDP is still on the positive trend. But I'll touch a bit more about this later. The third pitfall to look out for is that there could be more economic uncertainty. The fourth one is unexpected government policy. I think for those who have been watching the market for the last 4 or 5 years, we know that every now and then the government has been coming up with cooling measures. But other than that, there is also the labor policy. This is going to directly affect the rental market, those people who have properties to rent out. Changes to existing cooling measures. This has been, this gets some people a bit excited because they say, well, what else can the government impose, right? They impose so many cooling measures. I don't think it will get any tighter. But there is a possibility that perhaps the government may remove some of the cooling measures. Yes, there's a possibility. Some people say that, oh, it could be coming election. Due to coming election, some people say maybe it's a present for SG50 to the people. We wouldn't know. So what if, with all this expectation, in the end, by next year this time, there's actually no change. Everything is still status quo. That could also be something that may spoil some other people's plans, because some people are actually holding back. They have the money to buy, but they are just not willing to pay the ABSD. So they are just waiting for the government to remove some of the cooling measures. One of the government's labor policies is actually to try, okay, the objective is try to raise productivity, but by increasing foreign workers levy or making it more difficult to get some of the EP and SP, right, passes. And by doing this, they're hoping that it can create more jobs also for Singaporeans. But the fact is that there are some jobs that some Singaporeans actually don't want to do, okay, which some companies have no choice, but they have to rely on foreign workers. And I'm not talking about unskilled foreign workers, but I'm talking about some of them are graduates and so on. And that may cause some bottlenecks in the labor market. But in the last few years, actually, even after the general election, where the increasing number of foreigners was a hot topic, the number of foreigners, total foreign workforce in Singapore has actually been growing gradually. It's growing slower now, but it is still expanding. So that's a good news for landlords. So just now we were talking about, what about the cooling measures? Could some of them be removed? Well, if you now go out and buy a property in Singapore, these are some of the curbs that you have to look at, that you'll be facing. And one of the most prohibitive curb is actually the additional buyer stamp duty. I put here what it was formerly and what it is currently. But one of the speculation is perhaps the government will take one step back. They impose, like for example, if a Singaporean buying a second property, you have to pay 7% ABSD. Maybe the government may take one step back to what it was previously, and Singaporeans buying second property, maybe no ABSD. But I think one of the more prohibitive is actually for foreigners and non-individuals at 15%. Perhaps that could be rolled back a bit. TDSR is another big killer that actually cools the market. You cannot borrow more than, you cannot use more than 60% of your income to service all your combined loan, housing, credit cards, car loan, etc. And the effects of all these cooling measures basically is that when you buy a property, you must be prepared to hold for 4 years. There's higher costs, which actually suck up some of your available cash, which means that you have a smaller budget to buy the property, which gives rise actually to demand for smaller units, like 1 and 2 bedroom units. Another hypothesis is that maybe the government will remove some of the cooling measures if Hong Kong were to remove the cooling measures. Mainland Chinese are one of the biggest buyers in both Singapore property and Hong Kong property. So maybe the Singapore government is watching the Hong Kong government. The thing is that my team, we actually did some analysis on this and find that it's very difficult to compare the cooling measures in the two countries. Because one, we look at seller stamp duty. Hong Kong also has it, but the way they do it is they only need to hold up to 3 years. For Singapore, it's 4 years. ABSD. Actually, Hong Kong doesn't have ABSD, but they have, except for foreigners and non-individual, which all the two countries have slapped on 15%. But Hong Kong has something that Singapore doesn't have. It's called double stamp duty. And with this double stamp duty, actually it is tiered. The more expensive the property, the higher the tax, which makes it a bit, in Singapore, we don't have something like this. Another one, loan-to-value ratio. Singapore is actually fairly straightforward. But for Hong Kong, it depends on whether or not, firstly, you have any other outstanding mortgage, and secondly, are you borrowing for your own stay or an investment property? And they make it, it's a bit more complicated to understand, but basically their LTV can be anywhere from 40 to 60% if you do not have any other mortgage, or if you do, then it also depends on whether or not you're borrowing up to how much. So their systems is a bit more complicated. So if we, let's say Singapore government were to watch the Hong Kong government's cooling measures and expect to roll back only if Hong Kong does it, I think that they may not put that much weightage on it. The reason is that both economies actually are affected by different macro factors. We have the governments have different concerns, and we also have different restrictions on both markets. So perhaps if Hong Kong were to roll back some of the cooling measures, the Singapore government may take note, but it won't automatically lead to a reduction in our cooling measures. And likewise for TDSR, Hong Kong also have their own version. But on the bright side, the Singapore government knows that the market is cooling down, and so it has actually been reducing the amount of land that can be developed into private residential properties. Since 2011, it has been rolling back, like for example in 2012, the amount of units that, or space that can be developed on the land that is sold for residential purpose has reduced by about 30%. Last year it dropped by about 60% every year than the previous year. So as a result, there may be a bit of more supply coming up balloon somewhere in 2015 to 2017, but further down the road, things should ease up a bit, so there will be a bit more chances of finding a proper balance. Now, the outlook for the market. First and foremost, if you want to look at any market, you have to see what is the population growth rate. Because ultimately, when you buy a property, whether for investment or own stay, you want to see the value to grow. You also one thing is that the population must also be expanding. What's interesting in this chart is that the growth rate of the Singapore citizens and PR, the number of Singapore citizens and PR, are actually not growing as fast in the last 4 years. The segment that is actually growing a bit faster is the segment of non-Singapore residents. But our population is still growing at between 1 to 2%, fairly slow rate, but slow and steady. Another one is the family formation rate. What's the number of weddings and marriages that's occurring in Singapore? Happy to say that for the last 3 years, it has been every year, more than 25,000 couples died or not. Now, recently there's been news report about some hotels levying very high fee for cancellation of wedding packages if a couple decide to call off the wedding. Maybe they are doing some national service, doing the government service by trying to discourage this couple from backing out of their weddings. But they don't need to do that. On the whole, we still get quite a historical high of number of weddings that happens every year. And on the flip side is that number of divorces are also increasing. How does this affect the property market? Actually, when a couple decide to split way, go their separate ways, one of the partner may have to move out, and he or she will have to rent a property or buy another property. So, well, we don't want to profit from other people's misfortune, but actually, when a marriage dissolves, it can actually be a positive boost for the property market. So every year we are seeing The recent study by HDB shows that it's usually couples who are in their first 10 years of marriage may call it quits. But in today's Straits Times, Sunday Times, it actually shows that even older couples with adult children, after their children leave the house, they are also, well, they can't stand each other. Finally, they've been staying together for the children. They also decide to split. So we see that this number of divorce cases has actually been rising to now on each year about 7,000 couples call it quits. And of course, a few years ago, I think when the population white paper came up, this magic number of 6.9 million people in Singapore by 2030, it caused some segments of the people are not very happy about this. It's a bit of a scary number, you know. Now that we've got 5.3 million people, and some people are already finding it very crowded. You try to take the MRT every day during rush hours, and the MRT is also breaking down more often than ever. If it reached about 7 million people, can you imagine what kind of strain you put on our infrastructure and environment? So all this actually is related to the occupancy demand for residential properties. The cooling measures actually doesn't directly affect the rental rates, but rental rates has been cooling. Okay, it has been gradually going down, and one of the reasons is because there's more supply coming into the market. We have seen just now that the population is still growing, especially populations of non-Singaporeans, but rental rates are falling, but very gradual. Every quarter, roughly about 0.5 to 1%. And one of the reasons is because the occupancy rate is dropping, represented by the red line. And the key reason of this is because there's more supply. There's more units getting TOP, and they are also being offered for rent. Because in the last few years, when market was very hot, the people who were buying investment properties were increasing. So as a result, now they are getting their keys, and this is actually causing the occupancy rate to drop. We do a bit of crystal ball glazing and see what's going to happen in 2015 to 2017. The picture is that there's going to be quite a bit of supply coming out. Actually, this can be another pitfall number 5. You have to be wary about is that there is a lot of supply in the next 3 years. And we run a few scenarios is that, well, what will the rental market be like? If let's say the number of marriages is still quite healthy, number of divorces is still staying above 7,000 a year, and number of foreigners coming in are still increasing. But unfortunately, that is still not enough to absorb all the new supply that is coming into the market. So as a result, occupancy rate could be dropping below 90%. But there's one silver lining is that the amount of supply that is actually coming into the market is not evenly spread. In 2007, the amount of supply, the amount of construction that's going on can be fairly evenly spread between the core central region, that's your District 9, 10, 11, and Sentosa Cove, and District 1. In your rest of central region, which is the city fringe, and outside central region, which is like, for example, your Woodlands area, in the east, in the west, which is your Jurong, Clementi area, and such. And we find that in 2007, it tended to be evenly spread. But in the first quarter of 2015, about half of the new supply is actually in the OCR. So, and in the prime district, the blue segment, there's only about 23% compared with 38% previously, which means that not a lot of new supply is going to be in the core central region. So the core central region rentals may actually stay fairly stable, while those rentals in the OCR will come under greater pressure. What about property prices? I think needless to say, it's going down. It's just how much and how long will it continue to head in that direction. But the thing is that if you compare with previous downturn, this downturn is actually very mild by comparison. Another interesting thing is this. our GDP, typically in the past 20 to 30 years, every property, wherever we have property prices going down, is usually accompanied by an economic contraction, a recession, a global financial crisis, or something of that sort. But what is happening here is that we see that the GDP is actually in the positive territory. In fact, it's going up gradually. But the red line, which is the price index, is actually going down. So there's a parting of ways, which is something unusual, something we have not seen for a long, long time. And this is, well, it's not a world-changing event, but it is kind of a first in the Singapore property market history. Which brings me to this. This gentleman here is Friedrich Hegel. He's a German philosopher that lived roughly about 200 over years ago. He's quite famous for the way he looked at history, and he is reportedly to have been quoted as saying that all the greatest world events happen twice. So just now, the fact that our property market is cooling, even though our economy is doing well, that's quite a big event because it's something that haven't happened in Singapore before. Hegel said this, and another German philosopher, Karl Marx, added that, yes, the first time it was a tragedy, and the second time it was a farce. I think the first time when we see that prices dropped in 2014, it was a tragedy for some people, especially if they are property agents. And unfortunately, I think that in 2015, we are going to see a repeat of what we saw in 2014. And that, unless the government were to do something about the cooling measures, because right now, our economy is still doing fairly well. The cuts are actually in the government's hands. Whether or not they're going to ease the cooling measures will have a direct impact on the property market. Okay, with that, I thank you and concludes my presentation.